Hello everyone, this is John here with a StockSense video update. I'm going to be bringing you some picks for trading tomorrow. I think a couple of these could definitely make us some money. I'm going to first go over the broad market. This is the SPY. This is a daily chart. You can see that we have had a little bit of a bounce here. We don't necessarily know if this bounce is going to continue, but some buyers have definitely showed up. If we go into the 15-minute chart, we can see the action a little bit better. One thing you really want to note, though, is that declining 5-day moving average, this black line right here. The 5-day moving average is still sloping downwards, and we can see we've tested this moving average as resistance a couple times here. Now, I'd like to see some more development. I'd like to see this moving average start to slope sideways and then start to go higher, and that way we can definitely have more assurance that going on the long side or trading on the long side is definitely more favorable when we have that 5-day moving average increasing. Another thing you might want to note is, we've tested this 5-day moving average 3 times. The more times resistance is tested, the more likely it is to fail. And again, with support, it's the same thing. The more times the level of support is tested, the more likely it is to fail. So we could definitely see a continued push higher here. Let's get talking about the stocks that I think could be good movers for this week and tomorrow. SPGI is the first stock I want to talk about. I'm going to go on a daily time frame. I really want to point this one out basically for the technical pattern that's developed here. We have a really clear, what they would call a cup and handle. Outlined in red, you've got the cup body, and then over here you have what they would call the handle. And when the top of this cup and handle is broken, you're going to get an increased move, or you're going to get a rise in price up to the distance of the base of or the depth of the cup, and they call that a measured move. It doesn't always happen, but it's a general rule of thumb that the probability of this happening is likely. So I think we could definitely see some more buying in this stock. Want to go back to a longer term time frame just to see if we've got any other big levels of resistance that we notice. And we have a what would be called a 130-week moving average that looks like could be resistance. I don't really think anyone pays attention to that, though, so let's just ignore that. We definitely have some resistance right here, though. So let's be cautious on this one. We could definitely get a push higher. If you're going to trade it, keep your stops really, really tight. Don't ever take a big loss. That's the number one rule I can stress to you guys about trading. You can have small losses. You can be wrong about your picks. You can be completely wrong about your stock picks. But you just have to make sure that you keep small losses. So make sure you keep your stops tight. I also want to talk about SCSS. And SCSS looks very similar to SPGI in that we have a kind of a cup and handle that has developed here. So we've got outlined in red, we've got the cup, and then we have what could be a handle developing. And if this area up here, which is definitely some clear resistance, if we can break above that, we could definitely see a move upward. Let's go down to a 15-minute, zoom in a little bit. So you see we had some pretty big buying in here today. It looks like there's still some resistance up at about this level. I think this stock needs a little more time, but I think if we can bust above the 705, I think you could purchase this stock for maybe even a couple days worth of trading. But let's say if the stock gets above 705, you'd buy it there. But you really want to keep your stop, probably below this area right here, as long as the stock can hold on. I would keep your stop at around, what is that, about 691. So you're only risking a couple pennies, about 10, 20 cents on a $7 stock. I think that could definitely be a mover. I really like the weekly time frame here. This is looking like one of those technical analysis 101 patterns. This could definitely be a mover. But again, if it doesn't move, if it goes the opposite way, don't trade it. Get out of it. Ignore this stock and look for other potential buys. One of the other ones I want to talk about is ASH. And ASH, again, is similar to the others that I was showing today. It had a really nice day. It was one of the top gainers on the market. I think for a short-term play, you could play this stock. You could buy it above this level right here, about 43, 44. Purchase this stock above that and keep your stop probably right below this area right here. Keep your stop right there at about 42.89. So you're risking a very small percentage of whatever it is that you're investing. But I definitely think the stock could make another push higher. But like I said, again, make sure you manage your risk and make sure that if you buy this stock and it goes in the opposite direction, you get the hell out of it. And also, I think this stock could make a quick move up to here. I would probably sell it by then. So this would only be, a quick buy and a quick sell. You could hold it longer, but I don't know. I would, in this environment, I would take your profits if you get them. The other stock I want to talk about for trading tomorrow is AGEN, AGEN, and the reason why I want to talk about this is because of the pattern that has developed. It's not the best pattern, but I'm liking what I see, and I think it could be a good mover as long as you manage your risk and you play it correctly. I like seeing that the fact that we've had this increase in price as well as this increase in volume. That's a really nice thing to see when you see a rally occur and you see the volume increasing, and then subsequently you see a decrease in price but also a decrease in volume. So the volume relative to the move up is lower. You want to see that less participants are participating in the sell-off than they were in the buy in the rally. And it looks like we're kind of churning around in here. So if we zoom into a shorter time frame, we can see that the stock is still kind of moving around. We've got that 5-day moving average. It looks like it's sloping up. So if you're going to play this, I would say you would buy it above this level at 84 cents. This is a pretty cheap stock, so don't put your whole account into this, but maybe buy a couple thousand shares and buy it above 84 cents, and put your stop right underneath this area at about, let's see, what is that? It's about 80 cents. About 80 cents. Put your stop there. So you're really only risking 4 pennies, and that's a good risk to reward ratio. I think you could definitely see this stock test these highs back up here. I definitely think we could go back up to that level. Another stock that looks similar to this one that I want to point out is Jazz Pharmaceuticals. This has a very similar pattern developing, very similar to AGEN, and we can see that we've had this rally and it's been on heavier volume in comparison. Remember that volume is always relative, so the volume in comparison on this rally to this other action over here was low, and then the decline was on lower volume as well, and that's something that we want to see. So I think that going down to a shorter time frame, I see that the 5-day moving average, I see we're trading below it. I would prefer to see us trading above it, but this might be something you want to keep an eye on. If we can pop above that 5-day moving average and then maybe get above this level at about 984, I think you could buy it and keep a tight stop, and I think you could definitely make some profits off of that. Now, these are not long-term trades by any means. These are trades. These are where you purchase the stock in one day, and then you might even sell it that same day. So if you're going to buy these stocks, if you're going to trade these stocks, be really vigilant. As long as the price is increasing, hold on to the position and get as much as you can out of it. But the second that they start falling back down, take your profits. Don't be greedy. And if the stock goes in the complete opposite direction, limit your risk and take a small loss. Big losses kill us. Small losses make us stronger. Anyways, I hope this helps you guys for tomorrow. Keep an eye on these stocks for tomorrow. And tomorrow I will come back with an update on these positions. And again, go to www.stocksense.blogspot.com. There you'll see the daily updates and all the other information I have. Thanks.